Well, good afternoon. It is April 14th, and this is your Commodity Accelerator Update. I am not your financial advisor. Do your own due diligence. All right, so what you have here in front of you is the results from the program so far. I post this in a couple of different chat threads. Primarily, results will be kept here in closing positions. Those of you who are paying members will see there's a watch list, closing positions, open positions, some chat, and the alerts threads. The alerts thread is where I'm going to post all of the real-time entries and exits that I'm doing on the positions that we're about to go through here. So, and then watch list will be just kind of my shopping cart there. So try to kind of keep these up to date. If they're not up to date enough, just let me know. I can post the latest and greatest. But let's go through my most recent. So I've effectively built an administrative platform for my vertical spreads in Excel. So as part of that, I created this trade level grouping. So now we count wins and losses like normal traders. With 23 so far winning, 3 losing, 88% win ratio, and annualized for whatever that means, 680% return. I mean, I'm estimating that I'm making 300 to 400% of wherever my capital is. So as of like right now, it's like 80 grand. So these are all real USD, real numbers. I felt like these amounts probably are close enough to scale for the average person, up or down as you see fit. The trade plan, of course, if you know already, it max loss is somewhere around 50% of cost basis, and max gain can be as high as 300%. You can see where we've made 303 actually here on EWZ very recently. You'll see 250. You'll see above 200. So it just really depends on what the right thing to do in the position of the market. Many of the oil and gas trades kind of got blown up with the recent war activities, and we took them off for 120% on average, somewhere in there. So it happens. Sometimes we have to manage the trade. So I will be updating all those trade management elements in the chat. I don't want to create a lot of clutter on my Substack page and a lot of noise, because I do like to dollar cost average in more and more now these days. So, and I have a way to track that. So that's what I'm going to do. Moving on. So we're going to start here. I've got the list to the right. Held positions. I'm making this video available to anyone that subscribes to the site, just so you see what we're doing. The entries are somewhat precise in the chat, so it's like $50 a year or $7 a month, and you can participate in that if you're interested. But at the top of the list, these are entries in alphabetical order. We have APA, also known as Apache Energy. Okay, so just pulling way out here. This entry went in today, and the reason why is we back tested the very long trend line after the big run. So this is kind of marks the first re-entry into some of these oil and gas plays that that ran away from us, and we just took the profits. Let's get in later. So I'm looking to start building a position here. I'm in for 50% so far at 270, and we'll keep watching this. I'd like to build a position there. There's not much to tell. So one of the things we're looking for on all of these trades really is that the grain of our trend and our moving averages roughly follow the grain of our stop loss. That way we can kind of the trend, the overall upward bull trend will keep us in our profit zone at some point, with the idea being that we'd like to hit like the profit area up there and some in that area. So So we've got these moving averages moving underneath here, really closer than that, but more like here. So those are the optimal situations to be in. So we're adding a position on APA. Okay, AR. AR took position yesterday, added 25%. This is one of those that I did not take profits on. It got up there. It could have. As I recall, somewhere we got like maybe 70%. It just wasn't enough. Just leave it in, let it be. It's one of the few that we didn't, but that's just the way things work out sometimes. We do like this trade here because we're following this upward sloping trend line. We're kind of in the grain with our stop loss. Same story. I want to keep kind of averaging down on this trade. The initial breakout I didn't get but a 50% position. So I'm still content to just, this is end of the year expiration. We're adding on AR. Okay. BHP. This was a roll from a prior winner. I stand corrected. No, it's a half position. It's a half position on the back test of the orange line. So, out here. Okay, I just wrote that in my. All right, so here you have the large orange trend line. We back tested it as a flag. Get on my daily. All right. And we bounced right back up. I'm expecting, as I drew in this green line before, kind of expecting some flagging here before we break out again. Possibly longer term consolidation. That's fine if it does that. I would love to get another entry if we get close to the golden line here. But right now we're just sitting and waiting, and we're up, just as an example. So our entry, took an entry down here. If you guys haven't seen options leverage how it worked, that was 325. 325 on 10 contracts for $3,250. The current market value is $5,700 and the price is up here. So that is a 75% gain in a relatively short period of time, a couple of weeks. So we'll wait and see. BHP, nothing to do there. BTU, this is one of ours that's going against us. Let's see, let's clean this up. Okay, so I took some stuff off. So there's this channel. It's going like this. We got out of it. Looked great, and then we failed and roll over. And this happens. This is all trading in conjunction with oil and gas. So right here is kind of where we have the, let's just call it news, saying that oil has peaked or so forth and so on. Okay, so we roll over there, and now we're kind of trading in conjunction with all of the energy stocks. If you're look at Exxon and so forth, you would see this lineup in terms of time. Okay, so the good news first. So the good news is that if we zoom out, just broadly speaking, coal stocks look very positive. So this looks like a back test of an upward sloping trend line, and if we had options, significant liquidity in the coal ETF, this is where I'd prefer to make this trade from, but we don't and we aren't. So, but right here, it looks like this is kind of a channel, and we are near the bottom of that, ready to kind of make another leg higher. But BTU, the chart is just messier, just is, for various reasons. This company has historically been kind of full of surprises, and it's done weird things, and the chart's very difficult to analyze as a technician. So here's where we are with this. So we're at our stop loss and we're roughly around 50%. So I am not going to cut this position here because of what we see in the broader picture. There's another point worth noting. Here's a couple of things to notice. So first of all, this is actually a very, very close to a Gartley harmonic pattern right here. There's a little wick right there, but that's right there. All right, so I won't fully teach that, but the stock textbook entry is the 128 extension of the neckline right here. So, oops, the 127.2. So it's actually right in this area is where the stock entry for the harmonic pattern actually is for this harmonic pattern. So it just so happens that we're seeing a couple of different things that indicate this is probably some kind of reversal zone. So that would be a Gartley pattern, right? So I'm not keeping that in mind, that if I were strictly trading Gartley patterns, I would like an entry here. And so we see some liquidity and we see some candles. Unfortunately, it's sort of looking like a bear flag at the moment. So I'm going to wait a couple days and see if we can't get maybe a wick today, a reversal and gap fill. The plan, what I expect to see when I just see this chart, is I expect to see a gap fill to here. And I'm going to take half off there. That's actually going to roughly be near break even. So we're oversold at this point. I'm just waiting for a bounce, take half off, see what happens. This chart's unfortunately too unpredictable. It could just continue on and be a big winner. It could roll over and get worse, but the chart's it's too noisy. There's really no edge. When I zoom out to the weekly, it's hard to get a big picture. So I'm just going to cut the risk of this trade, provided we get this kind of gap fill here. And I'll send out the alert for that. But as it stands right now, this looks like there would be buyers. It looks like we should get a bounce. So the stock target for the Gartley trade, it is a Fibonacci target. Let's get some stuff. So that actually is it's not a perfect textbook one, but it's going to be about 382, which is roughly the gap fill. It all kind of comes together. So that's kind of my first target. And I'm just sitting in it like a harmonic swing trade. Let's see where we are. Okay, yeah, I had a full position on that. We're sitting at 50% loss right now. So I'm looking to average out, just take the bounce, take some money off. So we should get, this neckline right here, somewhere in there as a bounce. Even if I'm bearish from here, I still am seeing that happen. So hopefully that makes sense. That's the longer one. That's the trickier one at the moment going against us. I would not, if I were more than halfway through the time of this trade, I would probably cut it when I break the stop loss, just as you would a normal one. It's because there's so much time left on the trade that I can have the luxury of saying that's oversold. Let's see if we get a bounce and close it. CDE. Okay, so this one hit our stop loss. And by the way, the stop loss on these polygons is not a sure thing. It doesn't necessarily mean that it's exactly 50% loss. But we got kind of close to that on CDE. I let it run just knowing that silver was going to go through this beaten up. There's a lot of time on it. So I think I took some profits at some point and let some of it run. And we are sitting at 11% underwater here. So it actually looks worse than it is. I think I averaged down some. So that's looking really good now. This whole thing looks like it's gonna at least follow this upward trend. Maybe we get something going on like this, but that'd be fine. That'd be fine. I'm expecting the silver pause to go probably not longer than another 6 weeks or so. So at that point, we probably break straight through the ceiling, but fine on that guy. Okay, so Devon, another re-entry today. And I got not a great price, but decent price. I backtest this kind of support line. We had averaged out quite a bit on Devon, just to, let's see. I see 2 trades on the board. One of them was an adjustment for $400, and then the other one we made 10 grand. So we're up 10 grand on the Devon trade, roughly 140%. I have after today's ad, so I had about a 50% position, roughly 3 grand. I want to get 6 or 7 grand total. Took another half today at around $2. Current price is about $1.90 if you can get it. I'll look to add more. This current polygon's kind of off here, but I'm looking to add more on this full retracement down here to the moving average, and that would be somewhere in this area right there. Okay. All right. EWZ. So this trade went very dramatically in our favor, and I have been averaging in and out ever since. Let's see. We are currently on the 40-45. So that means this particular, I haven't drawn the new one in. So this guy is actually, he should be up here somewhere, but in the money right now, 75 cents or 50% as it stands. So I have averaged in as I got pullbacks and so on. There's really nothing to do if you're in this trade on the 40-45. We're at 41.79. I'll redraw this later on, but this is probably something like right here. This is actually where that should be. Roughly the angle. It's probably a little bit flatter, but it's EWZ, very successful. So I have a full position currently on EWZ. The initial trade was a 300% performer. Very, very profitable. That was profitability, one of my best trades so far. So let's see. FCX. This is copper, Freeport McMoran. We're in our roll version of this. So we took the trade, had a winner, we rolled up, and I've kind of let it go. This is a 6-18 expiration. Get it on. As I look at this, I'm going to pull up my breadth indicator. As I look at this, I start to think I might take half of this off today. This is at a overhead resistance. It's 80% win. Let me show you how this is done now on the new system. So what was that? So this is all real-time pricing. Here's the trade down here at the bottom is the trade that won. This is the current trade that's highlighted as the one we're in. We paid $333, although that was a roll, so we didn't get the best entry price. We just took whatever was available when we decided to cut profits at the bottom. So what I'm looking at in terms of trade management is I want to see, is the trade actually, is my Greeks and the setup of the trade actually in my favor to where I have I'm carrying a little bit of extra premium if I dump part of this right now. So let's take a closer look. Just to walk you through, 333 is what I paid. $6 is where the current market price is, and I have an equity of 266. 20 contracts. There's cost basis and the market value. All right, so I'm 80% up on this guy. So let's take a look. I want to know. So you guys saw on the chart overhead resistance. Okay, so this is getting kind of long in the tooth. And I'm not, generally speaking, I don't want to hold these guys too far past 60 DTE. Definitely not past 30. Definitely not 21. So it's getting close. I have these formatting to where once this thing is going to start to turn yellow once the DTE to catch my attention. So I'm looking for a few things here. And as it stands right now, Vega and Theta are healthy. Theta's actually a carry, so I'm profiting if the trade goes sideways. I believe Vega, have that sign right. Vega is actually in favor of the short position. I'm gonna show you guys that here in a second, but it's healthy. And then Gamma is starting to get somewhere where it kind of raises a flag. So that point of 0.01 gamma, once the gamma gets higher, now I get the point. Gamma's telling me if I stay in this trade, I risk kind of losing a huge chunk of my profits due to the fact that we're getting close to the end of the expiration. So that's kind of what the gamma's telling me. So it's not too unhealthy, but it's just telling you that it's starting to ripen. If we just think of this as farming. Okay, so my long implied vol is 49. My short implied vol is 47. That's good. That means that I would have hoped that I came into it, and I did. I came into this position. The implied vol was higher on the short leg than the long leg, so that means I took more vol premium than I paid for when I got in. It's a good thing. That's the way we want to enter these trades. Now I have more vol premium on my long position than I have to pay for to get out of the trade. So that entices me to consider closing this trade. Now, this is not the most ripe fruit that we can have, but I go back to my chart and I look at this. I see a volumetric zone up there, and then I see we're not super stretched out. We're pretty stretched, 32% above the 200-day moving average. We could go higher for sure. We can hit max gain for sure. I'm tempted to bank this, to be honest, guys. So I'll send out an alert if I do, but it's hard when you see, this is a strong candidate there, but when you see some wicks up here, it's hard not to think, hey, you know what? We're sort of in a blue sky mode anyway. This guy's, I don't know, it's probably going to come under some pressure, so I might swing trade it. FCX. Okay. We'll get through these relatively quickly. I want to show you the ones where we have to think about what we're going to do in the decision-making process. So KMI, we have a big down day. I put a stink bid in, didn't get filled. I'd like to get it for 60 cents down here in the 35.40 genre. So let's take a quick look at that. And okay, I'll pull this on my board. Show you what Kinder Morgan has done. Okay, so we're still open on all of our variants. So we've got a 30.35 open, and I've got a 35.40 open. And I'm not gonna, we're already at 30, we're 31 bucks. So if I open up more, it'll be the 30.35. But right now I'm showing you in the, sorry, if I open up more, I'll be the 35.40, pardon. I'm in the 30.35. It has a premium of about 80% for my $1.21 entry. We're done as far as that far into money. I mean, we're at $1.74 into money. I'm just going to leave that alone. And let's see. It's pretty rich. I'm not going to buy more Kinder Morgan unless it's extremely favorable to do so. The market offers me very low cost. So on my short, on my out of the money leg, 35.40, I have 10 contracts, a very small amount of capital. at this point, I'd like to get 60 cents. Like I said, my average is 145 right now. It's currently only printing 90 cents. So if I can get a pullback, get my 60 cents, just take another 10 contracts, just average in here. I might, if it's getting too heavy, too much exposure to Kender, I'm just going to sell some of these in the money contracts to get the out of the money contracts. But I'm just kind of managing that as a total portfolio there with Kinder Morgan. I still think the trade looks amazing. We had a this bull pennant breakout, and then we took it near the breakout, got a great premium there. Now we're kind of back testing our all-time high, no, it was a key level here that was previously support, and then it failed. So this is a key level I really like. I'd like to get in for some more there. I'm really thinking this is just kind of a break of that level, back tested, and then we go much higher. I'm in for the end of the year, so I'm just going to ride this whole thing out. Even if I get 150% weight, it's such a good trade. I feel strongly about it. So we're going to stay right there. It looks good. Mosaic. So this would be agriculture potash. I'm a little bit Missouri on how much Mosaic will benefit with a potential urea shortage, potential potash shortage. Mosaic has, I believe, urea is an input. It's not just an output. So they could have some margin compression, even though they're an ag company. So in terms of fundamentally, I'm not sure that we could just run out here and say, oh, the Strait of Hormuz situation is going to send this to the moon. Now, the chart was good. We took the trade because we got in low. We're expecting, a general agricultural commodities boom. It fits the bill on a number of boxes. And just checking in, I have $1.74 and we're at $1.45 today. So I'm only down 17%, even though the chart looks worse than that. And it's at this wonderful support. So I'd probably test the waters with Mosaic if you're not already in that here. Really, I'm probably not going to add positions until we clear this downward resistance, right? I mean, we could kind of bang around for some time. It looks like we're going to have a triangle situation. It may or may not correspond well with the current zones there in terms of my stop loss. So we'll just have to see how it goes. This one is not the best fit. I'd like to see more kind of you could draw a trend like going this way. You could do that. So maybe it's only 2 points. Not my favorite, but other reasons I got in that trade, and we'll see how it goes from there. All right. Rio Tinto, this was a roll. So we've already booked. Let's see what we booked. We booked 165% on Rio Tinto. That was a full position at $5,000, or nearly full position. And current position is we're roughly in the same neighborhood. So kind of playing with house money here. Showing 660, got 440 entry. This is 95 110 spread, so it's a $15 spread. And we are $3.59 in the money. So there's nothing to do here. Just ride this guy out, 50%. Notice how neutral our gamma is. That's really what we want to see on gamma neutrality. This is about a delta trade, about capturing the leverage against the price movement. And we don't, if we can get some of the other option factors working at an advantage, that's always good. But generally speaking, this is all about capturing the price movement, not about capturing time decay or any of the other things you see in option trading. So on the weekly, we've got some green support line here, and then we could have overhead resistance, but it's far outside of our profit zones. So kind of blue sky. I just want to see us hold that resistance line. Another note here, Rio and Freeport are essentially heavily correlated when you look at these patterns. So just like Freeport, we're hitting a spot here, and it's possible that I don't know, 50%. I'm probably not going to touch this trade, but that could be just jockey a little bit here. It's not. I've got a little bit of potential divergence there, but it's not super stretched out. It could keep going. I don't know, something to think about off camera, but trade is healthy. We're going to let at least half this ride for sure. URA is in the money by in the money. Let's see here. Let's go there. Okay, so in the money by $2, $2.50, 88%. That we're going to stand pat on that guy. I think uranium's going to have an incredible third quarter. That's that top trade. This is going to be a year in 27. Like I just said, I think third quarter is going to be insane. We'll be talking about rolling this and max gains. But as we sit on that trade, we're up. We're at 98%. So our URA, those are all in my personal account. So I do have 17 grand realized on all my URA trades. So happy with that so far. And then we had another uranium trade in Energy Fuels, and let's just verify. That should be, yeah. So I've got some positions that kind of stink, and then I get some positions that are great, and you guys have the ones that are great. So I just want to make sure that present that correctly. So we are 50% in the money here. On my weighted 205 net premium was like about 75% full position. We're at a 17.27, so a $10 trade. We're $2.20 in the money. This is another one I think is just going to blow out the roof. Probably third quarter. I mean, it could happen before that, but we're just gonna kind of ride that guy, expecting a big win here. I mean, the charts on the lower time frame, some say a cup and handle. You've got kind of a really long bull flag. We're just now breaking it. We look okay. We've just kind of hold that level. Now it looks like we'll probably run out and get max gain. Okay, wheat. Another fun one. The stop loss is not actually exactly set up correctly here, but this is one that I've been averaging down on. So a couple of positions here. A couple of characteristics here about this trade. So number 2 is going to be this 2 line is going to be kind of ingrained with the trade, and if worst case scenario we just hold that trend line, I'm going to get a nice profit by the end of the year. But some of the economics here, commodity deal, inflation, and some of the shortage, we can see a much higher potential outcome. Now, I want to put a fundamental opinion to you. So this fund actually suffers from something called contango, which means that it has to roll futures contracts, and the cost of rolling those contracts, I think it's like 6 months. So it's fairly rare that it happens. If you're a day trader, you're not even going to care, but it does happen. And so when you look at the wheat chart, this regular commodities chart, you're going to see flat lines. Here you're going to see it's downward sloping because the fund generally loses over time. So what we have, this is Ukraine. Okay. And I'm predicting the current events do create a bit of a food shortage, a bit of a fertilizer shortage, and a wheat shortage. And that this line, the second line, it's kind of that midline we've also seen as resistance, comes into play. So when I zoom into that, you'll see that's almost at the top of this max gain. So this won't be a roll. This will be kind of a one-shot commodity guy, but he goes out to late fall. So let me show you the internal metrics. All right. Okay, so as I'm doing these days, took this trade at 120. It is a $6 spread, out of the money, had good metrics, had really nice IV spread, okay theta, and so on. So the price kept going down on me, and we just kept averaging in. So down to where it got to the trend line, and that was my latest average. Now I'm looking at I've kind of squeezed the stop loss really tight now because I've averaged it way down. And this is in line with moving averages and all kinds of other nice support items. So I think we're going to run a fairly tight stop on this. I will be able to do that. And then we may take, you'll see there's a this orange line. There's some structural resistance here. We may take some money off when we hit this orange line here and just kind of claim some of these profits from getting in really low. I have scaled into a full position here at $6,000. We are currently 6 cents in the money. So on 60 contracts, that's okay. So $380. This now has huge leverage relative to the price of the fund, and I have a large, still 32.36. So I have a large volatility arbitrage there. So we'd be looking for the long volatility to cross the short volatility, add some additional premium on here. Let me show you one of the cool tricks I can do. Let's assume this video got longer than I thought, but it's pretty cool. Okay, so let's assume we hit somewhere in this zone, somewhere right here. It was like we hit that area and we go up and hit there. So let's take some money off the table, lock this thing in. So what is this position going to be worth there given our entries and everything else? Okay, so this guy, this is going to come something like early May, and let's call it 2420. Okay, so I'll go in. I have the full Black-Scholes model coded in here, so I'm going to go 2420 as a price override. I'm going to say my volatility flip-flopped a little. Let's just say it came to 37.37, more like break even. And then I'm going to move this guy forward. How many days? Come on. How many days? Let's move him forward about 30 days. 30 days forward. Okay, so future DTE, we're at 185 right now. Let's go ahead and put him at like 150. So that, plug all those numbers in. The Black-Scholes formula is telling me that 185 area is what this should be worth as we get up here. Now, it doesn't even look does not look like it's an 80% gain, but that's just how powerful this thing can be. And let's do it kind of like, just see what a parallel gets me. I mean, parallel is even further above that. So I am literally taking almost all of my initial capital off at just this meager local resistance point. So, so anyway, just to give you an example, probably looking at making 100% here, take half off, and then just let it ride for whatever I can score in house money. But that's how I would manage it. That is the Commodity Accelerator portfolio as it stands today. So Yeah, sign up, and I'm going to keep the alerts coming. And you guys have a great rest of your week, rest of your day. Thank you. See you soon.